Hi, I'm Julian Goto, Associate Portfolio Manager at LLC Private Wealth, responsible for our small cap discretionary portfolio. This is a version of a strategy that Harold and I launched about 4 years ago in a non-discretionary version. And due to a few great years of performance, we launched the discretionary version March 31st, 2025. So it's been a few months after our 1 year numbers, and the 1 year ended March 31st, 2026. We are very happy with the 1 year number of 48.8%, and we endeavor to keep that going as best as we can. Now, before I get into it, it should be noted that this is a portfolio, a strategy that's not suitable for everybody, carries a very high risk profile, and with these small and micro cap companies, there's a high degree of volatility and risk. This is something that we do our best to mitigate through holding certain amounts of cash and through a process-driven approach, which I'll get into shortly. So basically, I wanted to come on here and first walk you through our process from a high level, and then go over the fun fact sheets component by component. And this is going to be coming out every month as monthly returns are finalized in the portfolio. Our process-driven approach starts with quantitative analysis. It's about turning over a lot of stones, constantly screening for stocks, looking into new ideas. But first and foremost, they have to check the box quantitatively. This is done by fundamental analysis, balance sheet strength, poring over the financials, and probably most importantly, valuation. I always tell people we buy a gas station at the right valuation, and we probably buy Tesla at the right valuation as well, albeit we're probably a long ways away from that. The second part, if a company checks all the boxes quantitatively, is to understand the business. Now that the numbers make sense, what does the company actually do? What's their competitive moat, the value proposition? How sustainable is the competitive advantage? This is something we look into, through calls with management, and maybe more importantly, through calls with not management, other people in the industry, competitors. So yeah, we'll do sector analysis and make sure that we understand the business for what is driving those numbers. And finally, once we understand that, the next step is to determine the catalysts for growth or change in the business. So it could be a company is coming to market with a new product or offering. It could be a management change, could be a change in sector or regulatory regimes. But basically, what are the catalysts upcoming that will cause earnings to inflect? So, maybe nothing's changed in the business, but the company's decided that they're going to cut a lot of costs through a new strategy. That would be something that will cause earnings to inflect potentially, and we'd like to assess this. And I think generally in micro cap markets, the crux of the value proposition for our process is that with great illiquidity comes great mispricing. And so micro cap and small cap markets in Canada are always a quasi-private public markets. And so I would say in any stock market anywhere, in my opinion, price does not always equal value. And this is never more true than in micro cap markets in Canada. So we are constantly seeking situations where the delta between price and value is the largest. I just wanted to go over the portfolio fact sheet that's going to be reported monthly with returns and posted to our website from a high level. The first page, investment growth, risk profile, and returns data. The most obvious is the investment growth chart, a visual representation of the growth of the portfolio. You can see it's been on a pretty good constant growth trajectory in the last year. There was a large drop at the end of February, beginning of March, when the war in Iran and the subsequent closure of the Strait of Hormuz occurred. And we were happy that we came into it with nearly 20% in cash in the portfolio. In hindsight, we would have liked more, but I think that's always good to keep a cash balance for black swan events like that can always come out of anywhere. So the returns data is both relative and absolute. Relative to our benchmark, which is a third EPAC small cap value, 1/3 S&P TSX composite index, and 1/3 S&P 500 hedged to Canadian dollar. So this section will show year-to-date numbers and one-year numbers of our portfolio versus benchmark. And it will show trailing returns on various timeframes for both our portfolio, the benchmark, and monthly returns for our portfolio. The second page of the fact sheet includes a breakdown of portfolio holdings, including sector and regional exposures. So it has the top 10 holdings, which number one will likely always be a money market fund for day-to-day cash, just so we get paid to wait on our cash. And it'll include other high conviction holdings like Monument Mining and Progressive Planet, both of which have articles on our website if you'd like to take a deeper look, or feel free to give us a call anytime. So generally with this sector exposures, I would say we're very sector agnostic and country agnostic for that matter. We're bottom up first and foremost, but we are conscious to not slant the portfolio in a way that is too overweighted in a certain sector. We understand the structure of markets in Canada the best versus other countries, although we are happy to go wherever valuation and fundamental analysis takes us, and we do screen for international companies. But as I said, I'd say our niche is the structure of markets and life cycle of corporate formation in Canada, and that's what we understand best. But in terms of valuation being, one of our North Stars, I think it's interesting that Canada and Canadian markets are accretive to the rest of the world. And so generally, I find it interesting that Canadian listed companies typically have lower valuations or cheaper valuations relative to a US listed counterpart, even if they're doing business in the same country. So if you have two companies and they do 100% of their business in the US, but one is listed in Canada, typically the Canadian counterpart trades at a better valuation. That's something that we gravitate towards. It'll also have a section for relative contribution. This is just over the last month, which sectors have contributed to positive or negative performance in the portfolio, and a breakdown of that. That concludes a brief overview of our process and our portfolio fact sheet. Thanks for joining us, and feel free to reach out to discuss our portfolio further.